Look, Bitcoin is of limited supply. And yes, over the last 10 years, the dollar has gone down 99% against Bitcoin.
Despite the official narrative that all is well, the past few years, events have significantly eroded confidence in the US dollar. The excessive money printing in response to the COVID-19 pandemic and the decision to allow inflation to run much too hot before the Fed acknowledged the problem have all contributed to this. The faulty narrative that the United States can afford to print as much as it wants because it is a superpower and the issuer of the world reserve currency further adds to the concern. This is exactly why a video of Jared Bernstein, the chair of the United States Council of Economic Advisors, recently went viral on Twitter. Despite being a major driving force behind our economic policies, Bernstein found it difficult to explain how the government cannot just print money out of thin air, or why that would be devastating for the economy if that's actually happening. In his words, the US government can't go bankrupt because we can print as much money as we need. When he made this statement, Bernstein either didn't realize that there's a difference between printing money and lending it through bond issuance, or he just made the biggest Freudian slip. And the US government does create money out of thin air, something officials have denied for years. Above all, the video revealed the arrogance, ignorance, and recency bias common with policymakers like Bernstein, who absolutely refuse to acknowledge there's a problem that requires urgent attention. This lack of acknowledgement should be a cause for concern, as it could lead to a situation similar to Japan's, where the yen is currently trading at multi-decade lows against the US dollar due to a string of unfortunate economic policies. These experts have drawn parallels between Japan's 260% debt to GDP ratio and the United States' 130% debt to GDP ratio. According to Dan Tapiero, the CEO and managing partner at Tent Holdings, the US dollar might be the world's reserve currency and one of the highest valued currencies in the world, but it is gradually losing its dominance. Unlike some other prominent personalities in the digital asset space, Tapiero is not predicting the imminent demise of the dollar or a doomsday scenario that will suddenly see the dollar lose its relevance among fiat currencies. However, he acknowledges that the increasing popularity and adoption of Bitcoin poses a challenge to the dollar's dominance. Tapiero foresees a future where Bitcoin is a major reserve currency and the dollar is only viewed as an alternative. He discussed his views on the US dollar, the US economy, and Bitcoin in a recent interview with Opto alongside Skybridge Capital's Anthony Scaramucci.
I think we're through the regulatory chasm at this point. I think it's more or less safe to say. I know that there's an election coming up and Trump is pro-Bitcoin and Biden supposedly Bitcoin, but Trump was against Bitcoin before he was for it. And it feels like Biden is pivoting now closer to digital assets because they did allow for these Ethereum ETFs, but it doesn't matter because the average age of the people that are voting for it, Republican and Democrat, are in their 40s. The people that are voting against it are in their 70s and 80s. So I think we're through the regulatory chasm. And I think where we have to look now is use cases, utility, expansion of literally being able to email Dan money anywhere I want in the world. Eric Voorhees, who's a friend of mine, said, we were debating, I guess, Peter Schiff and Nouriel Roubini, but what Voorhees said, which I think is so brilliant, is I can email somebody in Russia the money if I need to. I can email somebody in Antarctica the money if I need to. I can email somebody the money in China if I need to. And the money has caught up to the communication, right? So if in 1830, we started the telegraph and we developed the Morse code, and I could send a transmission from here in New York to, say, somebody in San Francisco, assuming the wires are all set up, and it can get there in a blink of an eye. The money always was delayed. It's delayed right now in the banking system, but it's not delayed with this. This is now, we're in the age where the money has caught up with the technology and can be delivered at the speed of light, and it can be delivered in a way that is unbelievably secure. And people need to understand how transformative that is.
Several big TradFi players are embracing Bitcoin and other digital assets, something no one thought possible even 2 years ago. BlackRock, the issuer of the largest spot Bitcoin exchange-traded fund, is the world's largest asset manager with over $10 trillion in assets under management. Fidelity, the issuer of the FET Bitcoin ETF, is a multinational financial services corporation with around $5 trillion in assets under management. Last month, Millennium Management LLC, one of the world's biggest investment management firms, revealed it had the largest investment in the Bitcoin ETFs, With about $2 billion invested, pension funds, hedge funds, insurance companies, and others that rejected Bitcoin at much lower prices are now investing in the space, with much more to come. During the conversation, Tapiero shares his outlook on Bitcoin and the US dollar, and how he believes both could swap roles in the coming years. Here are more clips from the interview.
There are 125 other currencies that will go to zero before the dollar. So the dollar is the supreme currency and will continue to be, certainly for a very long time, in my view. I mean, it's achieved network effect to such a degree, it's almost to the same degree as gold. I mean, gold is something that, every single person on this planet, no matter how poor or rich, no matter, where they're living, everyone knows what gold is. And just a little behind that is the dollar. So I'm not worried about the dollar. I think, look, Bitcoin is of limited supply. And yes, over the last 10 years, the dollar has gone down 99% against Bitcoin. But just understand this, every single asset that exists in the world has gone down 99% against Bitcoin, right? If you do that chart, Anthony and I have talked about this before, it's not about the dollar going away. It's about investing in an asset where the supply is limited, that is a unique asset that is at the core of the entire digital asset.
In other news on chain, Bitcoin analyst Willy Woo believes Bitcoin is on track to hit $1 million per coin by 2035, spurred by an explosion in adoption. His pinned tweet on Twitter reads, "On track for $1 million per Bitcoin as fair value by 2035. That's if we take the user growth curve as a guide for valuation." Remember, I said fair value and not peak value in bull market hype in the early days. Price was slow to catch up to user count. Bitcoin didn't even have a price until the 1,000th user came in. Price discovery started with early markets like New Liberty Standard and Mt. Gox. By August 2011, Bitstamp launched, and we had multiple global exchanges to properly price the asset. After 2012, price pretty much oscillated around the increasing user count. Wu predicts that as adoption grows exponentially in the coming years, prices will follow suit, leading to a staggering fair value price of $1 million per Bitcoin by 2035 and even higher during bull market peaks. In a more recent post, he adds that Bitcoin will 10x in the coming years and become a global reserve asset like the US dollar and the euro. The tweet reads, "The financial world now believes Bitcoin is a fast-emerging asset class." Well, asset classes are valued in units of tens of trillion. What this means is the world actually believes price will 10x from here. It will rival the US dollar in size. It will become a reserve asset. In a follow-up tweet, Wu notes that these events are mostly likely to happen when global adoption reaches 25 to 40%, which he believes will happen in the 2030s. You agree with Willy Woo's reserve asset? And $1 million price prediction for Bitcoin. Please share your replies and comments on Tapiero and Scaramucci's discussion in the comments section below.